I'm looking at it in two ways.
Yeah.
For some stocks, fundamentals.
Yeah.
For some stocks, sentiment.
Yeah.
For resilient stocks that have been returning shareholder value consistently, the banking, the telcos, fundamentals.
Yeah.
And for now, the new, rather the most improved stocks for this year, particularly energy, I think investor sentiment has been building, rather driving the uptake.
Okay.
Yes.
Okay. I love that. Ronnie, I want to hear your opinion on that.
I think as I touched on earlier, I think the past few months with how the markets navigated the April tariffs, you saw there was a very big slump in the market that week. The tariffs were announced by the US. But only a week later, after the pause to the tariffs were announced, the market responded rapidly. It's almost like there's now a greater synchrony of equity markets all over the world.
Yeah.
The response time to macro geopolitical news is almost instantaneous.
Yeah. Meaning
there's very minimal lag time between when we get the news and when it actually translates into the markets.
Okay.
Which is, it's a good thing.
It's a good thing.
It's a good thing.
Yeah.
Because now investors are better able to price for risk. And to that end, I think investors are becoming more savvy in the sense that they're able to have a longer term a view to investing.
Okay.
That sees beyond near-term risks and appreciates the rewards for long-term investing.
Okay.
Yeah.
I love that.
Yeah.
So Ronnie, still on you, and I wanted to bring in the macroeconomic factors that really have affected the market. And I wanted to ask you, when you look at the shifts in the macros, I'm talking about FX movements, inflation, interest rates, what do you say is most impacting what we're seeing in the market?
By and large, in the macro environment, at least domestically, I have to appreciate the stewardship of the National Treasury and the Central Bank of Kenya towards beefing up our macro indicators. If you look at our forex reserves, for instance, they're at an all-time high of 10.8 billion USD.
Yeah.
That has also boosted the confidence in the shilling, for example, where we've seen some stability for more than 15 months running at 129.2.
Yeah.
That is for the USD.
Yeah.
And at the same time, inflation has really cooled off to very low single digits.
Okay.
Though that is likely to be challenged with how, let's say, the latest fuel price review has come in. Are likely to see that trickle down into other sectors.
Yeah.
But it's a reflection of the volatility and the geopolitical uncertainty going on around the Middle East area. I mean, key supply chain routes have been disrupted, and we are definitely not immune from that, even with the G2G.
Absolutely.
We still are having to feel the ripple effects of higher import costs, for example.
Yeah, and we certainly hope it will not hit us too hard, but it has started. So by the way, Ronnie and Melissa, so are you making a lot of portfolio allocations and adjustments in line with the momentum?
In this new regime, I think I even stated this before, it will not do to do a buy and hold. You have to tactically adjust portfolios at least every 6 months. Increasing exposure to outperforming sectors and cutting down exposure to underperforming ones. As such, even in line with our house views, we've always seen now investors tactically shift or tactically cut down exposures to sectors which are almost overvalued. So because we issue 1-year target prices, whenever market prices approach or hit our target price, we tend to see profit-taking activity take place, and now the proceeds are then reinvested into sectors which we recommend as undervalued. For instance, we've just published our H2 2025 equities valuation update, wherein we have a number of ratings for different counters, select counters. In the banking, covering insurance, covering energy and telco. And therein, we're already seeing traders adjust portfolios in tandem with that. it would be, I'm highly of the view that tactically shifting your portfolio towards sectors which are outperforming, rather than the typical buy and hold, will outperform over the long run.
Okay.
Yeah.
Thank you so much for those sentiments. And in the final round, I just wanted to hear what you are foreseeing in the coming 6 months and your word to investors, all of them across the board, whether they are the retail or institutions. What's your forecast like? In your own closing, who wants to start? Let me start with the exchange itself. What's your message to everybody?
For me, the time is for NSE. The time is now.
It's now.
It's never the second is now.
Yes.
Because as you have seen, and what my counterpart here had mentioned, if you invested in January, and right now you'll have your portfolio of more than 100% across the various sectors.
Wow.
So the time is now to come into the market. It's very easy to start trading. It's very easy to start buying into these shares. So if you wait for tomorrow, we will have moved from 100 to 200%. So the time is now.
It's now.
It's now. Yeah.
There's no better way of putting it. So ride the tide, you know. Ronnie.
Okay, as a parting shot, I think the next 6 months looks a bit more dynamic than the first half.
Yeah.
Of course, the defining moment will be August 1st when Trump announces the next direction with the tariffs.
Yeah.
We certainly hope there'll be a consensus, especially with among the key trading partners.
Yeah.
Because absent of that, we're likely to see a lot of volatility in financial markets. We also hope there'll be easing geopolitical tensions around the Middle East area, because that area affects a lot of supply chains. We are starting to feel the ripple effects as it is at the moment.
Yeah.
And if things get messier from here, likely a central bank will have to step in, raise interest rates to curb the anticipated inflation, which again may slow down activity on the equities, but on the fixed income side, it may attract some flows there. But on the flip side, if at all these things ease up or open up, we are set for an even better second half of 2025.
Yeah.
But even more selective opportunities to make alpha. And we pride ourselves in giving competent recommendations.
I like that.
Yeah.
Thank you so much for that, Millicent. You have the last word.
Yes, thank you. We expect volatility, yes.
Yeah.
And my final word is patience.
Yeah.
Whatever happens, we have held ground in the first half. I am trusting we will hold ground in the second half too. So let us be patient for the more seasoned and also for new investors. Yeah.
Wow.
Yeah.
That's a positive end.
Yes.
I think for me, the line here that I hear is that ride the tide. Is it?
Ride the tide.
Ride the tide.
Lovely way to put it.
Absolutely.
Yeah.
Thank you so much, my guests, for coming. That's Maureen, that's Ronnie, and Millicent. Asante sana.
Lovely.
There you have it. That's it on the Trading Bell. Half one, just checking on how we did Jan to June. Amazing turnovers, as you've heard here. So you better ride that tide. Thank you so much for your time. I'll leave you now with the markets.